Hi, it's Nick from WellStart here. The most common conversation I have with our doctors in training is how to approach buying a house, whether that be your first house or your next one. Well, imagine this. You're driving home from work and you see this house up for sale, and this is the one. How do you go about paying for this property? Well, unless you're fortunate enough to have $700,000 sitting around in a bank account, it's likely you'll need a home loan. And when a bank, or anyone really, gives you a loan, they're taking on some form of risk that they might not get their investment back. With investments, there's usually a risk-return trade-off. A higher risk can often lead to a higher return. Now, as a doctor in training, the banks are often happier to accept more risk when lending to you than they are to other professions. This means that you can get into a house with a 5 to 10% deposit but not pay any mortgage insurance. On a $700,000 house, this means you could get into that property with up to $100,000 less without paying a premium for lender's mortgage insurance, which can be a huge saving over time. On a $700,000 house, this means you could get into the house with up to $100,000 less deposit without paying a premium for lender's mortgage insurance, which can be a huge saving over time. We've been helping medical and dental professionals for over 65 years now, and history tells us that your next house likely won't be your last. So we encourage our clients to think of the bigger picture, and that means structuring your loans for flexibility for the future. It's not just about the lowest interest rate. If you focus on that, you could miss out on having the opportunity to jump into your next place sooner. It also means making use of an offset account. An offset account is a bank account that's linked to your home loan. Interest is charged on the combined balance. In this example, a purchase price of around $700,000, if you just got the lowest loan possible, you'd be charged interest on the balance of $560,000, which these days is around $13,000. However, if you instead only use 5% upfront and put the remainder in your offset account, you're still only charged interest on the combined $560,000. So the interest cost per year remains the same at $13,000. Now, don't forget about the first home buyer benefits available in your state, which can include the stamp duty concessions and making the most of the First Home Super Saver scheme. Remember too that with finance and banking, there is no set and forget strategy. It's important to keep checking your structure, be it one loan or many, to make sure that it fits your current stage in life. Here's a link to our blog article. If you need any help, feel free to get in touch.